Hello everyone, how are you today? Welcome to my weekly review, 13th of June 2011. Well, last week was not so easy week for trading, but the things we did talk on a previous weekly review actually worked and worked finally, worked very fine. Well, the major was the euro dollar when we talked about the short-term correction and long-term up move. We'll discuss about it, but that's how it worked. The same was with the Euro British Pound. Short-term correction and long-term still up. But we will discuss about this one as well. So that's about the previous week was not easy for trading because of many zigzags as you can see on any kind of pair. That was the beginning. That was the end of the week. That's how it worked. You see, many zigzags was not easy at all, and the same was, especially with the majors. But the final was the U.S. dollar strengthening. It happened during Friday. Does it mean the US dollar will continue to gather strength, or does it mean it's all just a momentum? And the US dollar will change the direction for long run. Well, there are many speculations, to be honest, on the world. Some say that the US dollar changed the direction. Some say that the indices will drop down. Some say the indices will drop up because Bernanke, well, probably will not get out with the QE number 3, but the situation in the US is not so bad. Many different speculations. As long there are so many speculations, the market will continue to zigzag up and down, again and again and again. So let's get ready for this week and see what opportunities do we have and what probably we could take during this week. Don't forget, we're still in June. Bernanke still will the market will still wait for Bernanke at the end of the month, and it will be very interesting to see how um, how actually the speculations from the market, from the investors, from the hedge companies will uh, will actually meet the expectations, will meet the actual results with Bernanke's release at the end of June. So let's say and try to get some interesting pair for the upcoming week. I would like to start with the Australian dollar. As we can see, we have our 105 still holds the position, right? We have our 105 still holds the position, the support, just right here. Two possible things. The first, double bottom here on this 105 with a oopsie. So just let me erase this unneeded line and create this line. Right? Double bottom with bullish divergence just right here. That's the first opportunity. If it happens, if we stop again on 105 with a bullish candle pattern, then yes, we can talk about longer up move. Sorry, up move. But only time will say if we are going up from here or down. Daily close below 105 should lead for lower down move all the way to 102, the same level I was discussed about during the previous weeks. So we still hold our short positions from the live trading room we entered on Thursday, I think, Thursday, on the Australian dollar with this aggressive break with stop loss above the line. We still hold it, we still ride the down move. Once again, for the conservative entry, we will wait to close the daily close below 105, and then we will ride all the way to 102 at least. The stop will have to be placed above 106.50 and the target 102, as mentioned before. Sorry. That's about Australian. What about the New Zealandian dollar? Friends, pay attention for a very beautiful situation. We have a divergence, a MACD divergence just right here, and we have a stochastic divergence as well. Now, we had an inverted hammer just right on Friday. It should take us down from here. The aggressive entry would be just right now with a sell based on the daily divergence. And once again, please pay attention here. Right? Daily divergence and inverted hammer. It should take us down. The conservative entry would be if we go down from daily to 4-hour charts, this uptrend line, if you pay attention, it calls a bump and run chart pattern, bump and run, and then bump again. It should break down, retrace to test, and go down. If it breaks the uptrend line, then the targets would be 081 as fourth target, and the next target could be even all the way deeper to around 07950 or 080. Right? So that's the levels for the New Zealandian if if it breaks. The stop anyway should be placed above 083, which will protect us even above 083.10, which will protect us from the last spike, the last high. That's about both Pacific currencies, both very interesting. For the Australian, I also see a up move possible right now. For the New Zealandian, with this divergence, it looks like only a bearish move as for now. That's about these two. What about the majors? Let's go for the euro dollar. We talked and we say that on the short term, probably we will have a correction all the way for 20 moving average on the Bollinger Bands. It actually happened and we had a correction. What next? Let's see the weekly chart. The weekly chart, friends, create a Marubozu and a kicker down with the divergence. Does it mean it's about to change direction without even reaching the previous high? Very possible, could be, but stochastic is still bullish. RSI still holds its support, so still early to celebrate. It is bearish. It does look bearish, but we still have few levels to go. First of all, it's 20 daily moving average. Second is support. Third is 50 level of the RSI. So don't celebrate so quick. The euro still could surprise. But the crisis across the euro should make it difficult to trade. Just right here, it's not easy at all. And if we pay attention to the 4-hour chart and the 1-hour chart, then we see the Bollinger Bands open and the full right down all the way for the support, while on the 1-hour chart there is also a beginning of a divergence, just a beginning, the fourth low of the possible MACD. Now we should have some correction and another drop down. For complete divergence, it should retrace the euro up. Will it happen? Only time will say. Anyway, if we have a daily close once again below the 20 moving average of the Bollinger Band, the daily Bollinger Band, it should be considered as an opposite direction and a possible down move all the way to 140 again. It's about the euro. So as for now, I am neutral. I will be bullish if 1-hour or 4-hour chart divergence will be completed, and I will be bearish for longer term if the 20 daily Bollinger Bands will be broken. About the British pound dollar, still the same. It looks like riding up, but it dropped down again. 165, the level I was looking for a close above, never closed above. So no celebration yet. But pay attention that 20 moving average of the Bollinger Band was broken together with the RSI 50 down. So it looks like the British pound is going all the way back to 161 at least, and then possibly even more. So pay attention for the next, friends. we have an up move, an uptrend just right here with these three spots, and we have a support. It should be meted together, and if it breaks below 161, then the doors will be opened all the way for 159.50, and maybe even deeper if this level also will be broken. On the weekly chart, we still hold, if you pay attention, we still hold the 20 moving average longer band. So it's little early to celebrate once again on the euro and on the British pound, but the British pound does look bearish because it broke the support line just right here. It closed below 20 moving average. It should retrace a little bit and then continue all the way to 161. Stop loss anyway, as for the beginning, will be placed above the last high, and for conservative stop, even place it above the last double spikes here, around above 164.60. What about any more interesting pairs? Euro British Pound, friends. Pay attention for this situation. We are going down for the short term, right? I still think that this support is important level, which is 080. I do believe it can reach it. That's on the daily chart. It also will reach the daily 20 moving average of the Bollinger Band, which should be blocked there with the RSI on the daily chart, and we should have another ride up from this area. On the 4-hour chart, it should complete our divergence just right here and take us up. But let's see how the market develops from the beginning of the week. I am bearish yet. I will be bullish if the divergence will be completed around 080 and retrace up. Pay attention for interesting news, friends. The investors say to set a pending to sell Euro British Pound on 090. As for now, without any kind of stop, the stop probably will be around 300 or 400 pips, but I will update you. It will take 1-2 weeks more until the pending probably will be taken, but they say to sell long term Euro British Pound around 090. We will discuss about it when the pending will be touched. What next? Well, the Euro Yen from 3 weeks ago also looks good, but here the situation also not clear. I prefer to stay away. There is a possible divergence being created here, so early to celebrate, early to even think about taking the Euro Yen. I stay out of this pair. Now for more interesting opportunities, Australian against Canadian. Pay attention that the pair closed below the uptrend line, as you can see just right here, and below 20 moving average of the daily Bollinger Band. It should retrace to test it and continue down. It looks like we have a long-term call down for the Australian Canadian. For those of you who are in from the live trading room, please try to hold it all the way to 102 20 30. We will discuss about this pair on the live trading room. That's about Australian Canadian. If you are still out, wait for a retrace and consider to sell it then. Stop loss above the upper boundary of the Bollinger Bands, profits around 102.20, 30. That's the first. The second target will stay open. It's another good opportunity. And let's discuss a little bit about our commodities, friends. Remember this uptrend line? It begins to be relevant because it's kind of double top here on the kind of double top here on the come on. Just alright, kind of double top here on the gold and retrace with the divergence. Very interesting situation. If this uptrend line will be broken, friends, it's a long-term call down for the gold. We target around 1470 as first, and the second would be around 1430. Stay tuned. It's very possible to sell. About the silver, the same situation. It can't rise up yet. If it breaks down the support around 34, sorry, it's a sell signal all the way to 31 and maybe even deeper. So stay tuned for both of them, both of these commodities. They both look possibly bearish. About the about the indices, well, we have a beautiful, interesting situation. First, because we have a close below our last close, just right here, as you can see, just right here. We have a close now below last close, but we have to pay attention for two things. We have to pay attention for two things. Just a minute. We have this uptrend line. We are going to meet it very, very, very soon, and then it will be the final thing. If it breaks down, yes, we are going powerfully down. If it holds, it will be very interesting situation that could take these indices all the way down for long term. And if it breaks, then we will talk about levels. I don't want to scare anyone, but if it breaks and it looks like it's going to break, we will discuss on the next week about the long term targets, because it does look very, very bearish right now. That's all, friends. The concentration is on two Pacifics and the majors: Euro, British Pound, dollar, both of them, and Euro, British Pound as well as a currency. Australian Canadian looks well as well. And the rest of the pairs, the crosses, there are some that I watch, but there are no more. There are no now good setups yet, and of course we will discuss about them on our live trading room. Friends, thank you very much for your time. I wish you very, very good week. Very interesting week is going to be, that's for sure. Good luck with your trading. Yours, Vladimir.